Yeah, I mean, we are seeing fragmentation because we've got rising powers and it's going to shift around, and we've got to add India into the middle of that mix as well. That is more of a benign superpower on the rise. We don't really know how it plays out, but fragmentation seems to be the answer. But the US holds the one weapon, which is the dollar. 87% of every single trade transaction on earth is in that one currency, and they will use it to their advantage. As we saw with Russia, they just cancelled their reserves. You know,
Yeah.
it's staggering how powerful the US is. So that change to a multipolar currency world will take time. It just simply can't happen because the world is 400% of GDP in debt, 400 and something percent, of which at least 50% of it, maybe 70% is in US dollars. So if anybody tries to move away from the dollar policy, they've got no dollars to pay their debts, in which case everybody goes bust. So all of these things have to be done slowly. We have to split the world apart slowly. We have to get rid of this debt situation slowly, because if you don't, all outcomes lead to complete societal global collapse, which nobody actually wants, apart from maybe Balaji.
So what is your view on crypto in that world then?
Crypto in that world, as I've always said, I mean, I got into the 2013 for exactly this issue. I lived through the European banking crisis. Our local bank in the village went bust and took people's money because they converted deposits into preference shares and then defaulted on the whole fucking thing.
Which bank was that?
I can't even remember which one it was, one of the bloody regional banks in Valencia, but they were terrible. I mean, the Spanish banks, the Italian banks, what they did was awful. And then Cyprus was the big ringing the bell moment when I started trying to set up the world's safest bank. And then basically I was told, if you have a non-fractional reserve bank, you'll take all the deposits, which Caitlin Long is learning. They don't want it. So that's when I learned about crypto. And that case is, I mean, this banking situation is almost identical to the European one that happened. And we know the answer is, right, we've got all this commercial real estate stuck on these banks as well. That's going to end up in the balance sheet of the Fed. The Fed will be taking chewing gum wrappers as collateral, you know, to give out loans to stop this thing imploding. You know, let's take anything, as the ECB did. So crypto does well in this environment because it is a way out, right? Every time you debase the currency over time, crypto goes up. And it doesn't go up just by a factor of the devaluation. It goes up by a large multiple because it's a technology that's building a parallel system here. So it can only be bullish.
Bloomberg warned that Bitcoin and crypto may yet see a long-term correction thanks to central banks keeping liquidity tight. Despite gaining 70% in Q1, Bitcoin is not convincing everyone that it will continue to climb or maintain current levels near $30,000. Hello and welcome to Money Talks. In today's video, Raoul updates us about the recession fears and the current market cap of the crypto industry.
I don't know, but one thing I have learned, and you guys will appreciate this, is I was thinking this through, this are the US being overreaching in regulation, etc. And we're armed with a thing that the three of us know, but most people watching this don't, is the UK is the single greatest regulatory arbitrage country on earth. It's made more money out of regulatory arbitrage from the US than anybody else ever. And you see, you need to understand the financial market. So after Nixon depegged from the gold standard, the FX markets were not, FX was a regulated market by the United States because they wanted to stop capital flight. So the UK took it over and the FX market was born, became the largest market the world has ever seen. Then in the middle of that, people wanted dollar funding. And the US had capital restrictions. So the UK said, we'll start something called the Eurodollar market. It became the largest market the world had ever seen. And then what happened was, this is the part of my career, is suddenly some bright sparks invent a swaps market and the derivative market explodes. The US bank regulators wouldn't allow them the reg cap to do it. And the UK changed the reg cap rules so they could do it in size, as did the Europeans. So they got all of the derivative markets. So London remained the largest financial center for 30 years because of US regulatory arbitrage. It went back to the US recently because the Basel III was so restrictive in Europe that it went back to the US. But the UK have been making very strong statements about crypto, as have the EU, even France, even Macron is talking about it.
Yeah.
As is Switzerland, as is Singapore, as is the UAE, as is Hong Kong. That is the group of countries that enabled the Eurodollar market and the FX markets. They're all there, and the derivative markets. And the UK plays very well with that group of people. And the Cayman Islands is the other one because of how the offshore funding markets work. So they're all there. So my guess is if the US screws it up, the UK will eat its lunch. And my guess is they've seen that opportunity and they know the rule book. Because there is demand. And we'll see Coinbase moving. We'll see Circle, I think, are moving to Paris. We will see this endlessly because it's exactly why the big banks in the US ended up in London.
Yeah. I never knew that Circle would move to Paris. That's
what it seemed to be, the announcement. Couldn't tell, but I'm sure London's going to fight for a lot of this stuff.
Examining the macroeconomic climate, Bloomberg Intelligence became the latest voice to note the close relationship between crypto performance and global central bank liquidity levels. As inflation bites, banks have been withdrawing liquidity from the economy, with risk assets declining as a result, including crypto. The United States Federal Reserve's quantitative tightening, QT, which began in late 2021, coincided with the current all-time high for Bitcoin. Despite the recent banking crisis, Bloomberg noted that plunging M2 money supply and bank deposits mean liquidity continues to be squeezed.
You know, my original background was Goldman Sachs. I started around the hedge fund sales business and equities and equity derivatives, then ran a global macro hedge fund, trading everything in the world, then started writing macroeconomic research from the Mediterranean coast in Spain for all the biggest hedge funds, sovereign wealth funds, family offices, that kind of stuff. Went through the financial crisis and the European crisis, and that's when I was trying to start this bank. A friend of mine, Emil Woods, tapped me on the shoulder and said, have you looked at Bitcoin? I looked at Bitcoin. I got it immediately and wrote the first ever macroeconomic strategy piece on Bitcoin and how to value it back in 2013, and I bought it at $200. In the piece I said, listen, if I value it in the same way gold stock to flow is valued, then Bitcoin with gold at 1,300, I think it was at the time, then Bitcoin's worth $1 million, and it's at $200. So I said, okay, look, let's assume I'm a complete moron and I need to discount myself by 90%. So at $100,000 fair value versus a $200 price, I said, this is the best risk reward we will ever be given in our entire careers. And so I bought it, as did a bunch of other people. Saw that article, got passed around a lot. It then went up 5x in 3 months. And I'm clearly now thinking I'm George Soros, maybe Julian Robertson, maybe Paul Tudor Jones, all rolled into one huge ego. It then falls 87.5%. But my time horizon, I said, it's a call option, but it's got an unlimited time horizon, but my time horizon is 5 to 10 years. So I'm happy and I don't really care what happens to it. Fine. And I sized it appropriately. So I held it, went all the way down, kind of kept off my screen, didn't really care about it. Then it starts crawling back up again. And we're following it on Real Vision and educating people and talking about it. So it's not like I wasn't interested. But then it gets the big run up in 2017 and the forking wars happened. And people were forking the Bitcoin chain. I'm like, what the fuck does this mean? Am I going to back the wrong chain? I don't know. I don't understand it well enough. So I took profits at about 2,000. I've made 10 times my money. I had broken my rule, which was I was actually in this for a longer term time horizon. So I didn't trade my strategy because I got confused on the route. Anyway, 10x, I'm super happy. It goes up another 10x. I'm like, I don't really care. You know, I've made 10x in a trade. By anybody's standards, that was a great trade. I then wait, follow it, get involved in it, educate people, all of this stuff. Then April 2020 comes along and I load up the boat. And it was my biggest bet I'd ever made. Put it into that. Pretty much nail it. It goes up. Great. I then recently went back and thought, how did I do? Because, you know, I bought it low, I sold it high, and I bought it in a sell-off. And I went back and thought, why haven't I just kept my original bet, which was much smaller? I just held on. I'd have done 20, I would have done 5 times better. I'm like, holy shit. Because none of us, we're so used to cyclicality. We don't think of exponentiality. And because I bought it at 200, sold it at 2,000, bought it again at 6,500. I'm like, you moron. Then I figured out, okay, I know what you should do in the cyclical asset that goes on a secular uptrend. You should buy it every time it gets to the sell-offs. We know this. So I figured out if I just added the same amount as my original bet every time it got to the bottom of the cycle, and I assumed that I would miss the bottom of the cycle by 40% because I'm a moron, I would have made 25 times as much money.
So that's now your strategy, I assume.
That's entirely my strategy, because I know how this plays out with these longer term assets. So I don't trade it at all. Yes, I've made, the biggest switch I made was when I sold most of my Bitcoin and bought ETH back in whenever that was, 2021. And other than that, I have a few positions and occasionally I'll reweight, but I just don't trade it because I just think I've never found anybody who's made as much money trading cryptocurrency as they have done holding it. And, the NFT market is a fabulous way of doing this as well, because it's a call option on ETH. You get an ETH exposure, but if you choose the right NFTs, and I see what, you guys have done really well in this, and you guys are looking at more of the fine art side and the punk side, this stuff will do fine. And in a bull market, everybody wants trophy assets because they have more money. So they buy punks and they buy fidenzas and they buy whatever it is, beeples and stuff. It goes up more than the market. Like high-end property always goes up in a bull market because there's excess capital, limited supply. So that call option, let's say punks go from 70 to 150. It's doubling what ETH does. Now, there's a chance punks could triple and ETH could go up 10x. Well, then there's a 30x out of this. So it's all fun to be in the NFT market, but there's actually a serious thing. I mean, I probably don't have more than 10% of my crypto exposure to NFTs because I'm just not smart enough in the space. But there's some real opportunity within that as a extended call option on ETH or Solana or whichever one you want to choose.
So, do you agree with Raoul Pal's prediction on crypto? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.